So I am just going over my trading session for today. I decided I'm gonna potentially just start recording them. So first things first, when I came here, I seen that my 3 hour time frame was bunched and jumbled up, which was the same case for yesterday. But I also noticed that price really hadn't broke any structure from yesterday. Well, structure was here yesterday. So then we come to the 1 hour, and what do we see? We see price pushed right here. This is, like I said, this is from yesterday. It broke here. So this is the high. This is the low. It's downtrending structure. Price gave a retracement. So it filled in here, pushed, and we will be looking for it to push off and break this low, creating a new low and starting that whole process over of impulse, retrace, continuation. However, when it got here, it closed perfectly on it. It didn't break it at all. It closed perfectly on there, which in that case, and then rejected. So for me, that kind of told me already, okay, price might be looking to push to the upside, or it just needs something else to give it that push to the downside. So I drew this, and understood I was focusing on this area. I wouldn't be very surprised at all if we had some uptrending movement, which I'm going to go ahead and erase everything so we start from scratch. We had some uptrending movement and potential reversal because price did everything it needed to and couldn't break the low. It found rejection there. So then we go to the 10 minute, right? And we can actually, we'll use this as a backtest session. All right. So I'm coming to the market. So the first thing I'm looking for is 10-minute structure in that little area, right? So I'm looking for 10-minute structure, focusing on this area right here that rejected. So we go to the 10-minute. What's the first thing I notice? Okay, I find the clearest structure possible. So the clearest structure possible is here, starts here. So we got a low, price pulled back, broke, made a new low, pulled back, broke, made a new low, pulled back, broke, made a new low, and then it stopped. So this was the high, this was the low. And so what happened? Price, boom, 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 broke that high, leaving a zone right here. So this is a pretty nice size 10-minute zone that it left right here. Where did the high stop? So the high actually stopped here. So that means price pulled back, pushed again. What did it do? Pulled back, pushed again. So this was the low, that was the high, and then guess what? So price left an open 10-minute zone, but current price action of the 10-minute is actually downtrending, pushing into that zone. So what we want to do is draw this last break. So now what do we have? We have two 10-minute zones. We have a 10-minute uptrending zone based off of the change of character down here at the bottom. And then we have, and it left the open zone because anytime that structure creates new structure, whatever zone was left that went untouched is still a viable zone that can be used later in the future, but now it's considered an open zone. It's only because it's a current zone and an open zone. A current zone is within current market structure. So this one is within current market structure. It had a low, had a high. The low was broken, so now it's in an impulse phase. We're looking for it to identify its high or its low so that we can start looking for a retrace. So this is current market structure right here, or a current zone. This is an open zone because the price left this zone here, created a high, pulled back, and then created a new high. So it created new structure. So this was never tested, so it's still viable to us. It can be used at any point in time. But it's not current market structure because current market structure is downtrending. So we see that. So that gives me two kind of ideas. So again, remember what we said. We said either price needs something alternatively to push off of to get it past this low on the 15, or at least on the 1 hour, or price is looking to make a reverse to the upside. So we have two zones that kind of give us opportunity and option to look at both sides of that. So the next time frame down, all I'm focusing on is this area right here, because we identify our open zones, but our focus is current market structure and price action. Current price action is this impulse right here. So we'll go to the 5 minute, and what do we see? 5-minute and 10-minute structure is actually the exact same, minus one little detail. So price was here, had a low here, created a high here, and then broke. But when it broke here, it retraced. So on the 5-minute, we actually have this little zone right here. Now, whenever it's typically this close to the 10-minute, if it was within the 10-minute, I wouldn't have drawn it at all. Because it's outside of the 10-minute, I have to draw it because 5-minute structure is truly here, where 10-minute is there. So we had to draw it. So now at this point, we're just waiting to see which zone does price pull back to, how does it do it, what's going on here. That's all we're looking for. So let's get a few candles. One. All right, so at least on the 5-minute, we see that price has solidified this is the low. So 5-minute, we know this is the low. 10-minute, still pushing. It hasn't solidified a low yet. But the 5-minute at least has. So that gives us an idea of structure, right? Boom. Well, look at what happened. The very next, after the first pullback, so price has a new low. Let's see if 5-minute defines that. Yes. So 5-minute now has a high here and a low here because it just broke market structure. Now let's go to the 10-minute and see if the 10-minute has identified. Yes. So now we could change this to a 10-minute low, understanding that the 10-minute low and 5-minute low are the exact same. We're going to leave this 5-minute high here so that we understand, hey, if price breaks that area, then we got a change of character leading to this 5-minute, to this 10-minute, or it could just be a quick little fake out to tap into there. So we're going to see though. So on this next candle, we get a break here from price. So we understand that there is a zone somewhere within here. One thing I do notice is there's a nice gap in here. We identify the gap, but the gap is really not, we trade the zone. So the gap falls within this area. I'm going to identify the zone, which I like this last candle because this is the last candle before the gap happens. So if price fills in this gap and taps into here, we want to look to get into uptrending move if we get our confirmation candle. So I identified this 5-minute. Boom. Sorry. 5-minute. So this is current 5-minute structure. Now, and it makes sense because guess what? Let's go back. On the 10-minute, the current 10-minute structure has just impulsed to the downside. It's solidified its low. So it makes sense that the 5-minute kind of changes structure and looks to push up because, hey, now we're looking for this 10-minute to retrace and potentially push off. So it makes sense. The whole point is making sure the story continues to make sense to myself as it goes through. So let's see if the 5-minute solidifies the high or if it goes higher. Boom. 5-minute solidified the high up here and started its pullback. So let's see what happens. All right, price is now testing that. So it tested that and pushed off. Me personally, I mean, I could look to enter up here. Me personally, that's very aggressive. So I would give it a little more space. When it's very aggressive like that, I always give it a little more space. So we giving it a little more space to see if it triggers entry. Doesn't trigger entry, immediately falls down. So now we got to wait for another confirmation candle if we're going to look to enter. Boom. Prices continue pushing down. Continuing pushing down. It continued to push down. It broke right on the line. I personally, in live time, I did not consider it a break. I'm still not going to consider it a break. So the way I'm kind of looking at it is price pushed and tapped into the 10-minute. However, it closed back within the 5-minute. So if we get an opposing candle, something like that, cool. Now we want to look to enter off here, right? If price could push past it. So I'm not going to set it all. We're just going to see. Boom. It did not. But this time, for sure, price broke this 5-minute low. So the main thing we want to do, go check the 10-minute too. Boom. The 10-minute was broken too. So now this whole little thing is one big demand zone. One big supply zone. One big 10-minute supply. Again, we could do a 10-minute or 5-minute. I typically go with the higher time frame just because they both function the same. So I'll enter trades off the 5-minute or the 10-minute. So it doesn't really matter which one I define it as. Now, if it's like the 10-minute and the 15, that's different because I don't enter trades off the 15. I enter trades off the 10. So in that case, I would need to identify the 10. But when it comes to the 10 and 5, I enter trades off of both. So that part doesn't really matter too much to me. So next thing now we see we're looking at, we notice that, okay, price is still downtrend pushing, but it's entered into this open zone now. Because it's entered in this open zone, I am also looking for buy opportunities, even though that's the sell. Anytime it taps into a zone, I am looking for opportunities. All my zones are viable. I don't just draw random zones on my chart. Every zone I draw on my chart, I make sure it's a zone that has some type of intention to it, so that if price makes its way to it, my intention is to get in a trade if the confirmation presents itself. So even though this zone is here, I'm still looking to enter into buys because of this zone right here. So let's go through some candles, see what happens. Boom. Price immediately push off of this one bullishly. Yes, it's still within this one, but this one has been sitting here waiting. This one makes more sense to me than trying to get in this one. And this one is a confirmation. I have to, but if I'm looking to get into a buy here, I need a bullish candle off of this zone. If I'm looking to get into a sell here, I need a bearish candle off of this zone. This is the first pullback, and this is a bullish candle. So if price does break this high, I'm looking to get in. 11.5. Let's see if we get in. Boom, we are in this trade. So let me go ahead and set it up. 11.5. I always add a pip, so 12.5, and I'm looking for 1 to 2, which would be 25, and I always add a little 0.5 to that, so 25.5. We'll just do that. Right, so let's see, next candle. Boom, next candle takes out the 10-minute high. So in this case, yes, it gave a bearish candle. If it would have broken lower than this low, then I would have gotten out. If it did, but it didn't. So guess what? Now we go to the 1 minute here. We are looking for structure we can use. This was the high, it never broke. Okay, so now this becomes my 1 minute. So it's a couple things we got to do. So this is my 1 minute. So once I'm into a trade, I manage my entire trade on the 1 minute. So I enter trades on the 5 minute or 10 minute. I enter trades based off 5 minute and 10 minute time frame. I always enter on the 5 minute time frame, and I always manage on the 1 minute time frame. And my mindset behind that, before it reverses on the 5 minute, it's going to reverse on the 1 minute. Before it reverses on the 10 minute, it's going to reverse or show you a hint on the 5 minute. That's why I keep all of those three together the way I do. And it helps me cut my losses. So it doesn't change. If I'm going to lose 5 out of 10 trades, I'm going to lose 5 out of 10. But managing it on the 1 minute allows me to lose less on the 5 trades that I'm losing if structure presents an opportunity to move my stop loss versus taking a full loss 5 different times. So that's why I manage it on the 1 minute the way I do. Now this 10 minute was broken. So what are we doing now? Now this turns into a supply from this high to this low. But we just want to find something that falls within the range. So we go here. We put it to the current high. And we understand that this can adjust as price moves forward. Because if price doesn't solidify that 10 minute as a high, then guess what? It can keep going. So we identify that. We're waiting to see about a 10 minute high. We got our thing here. So now we just get another candle. All right, so price is now pushed into this 5 minute zone. Let's go to the 1 minute. Do we have anything? Yeah, I would give it this. So we're here with it. And we don't have a 1 minute high yet. Boom, the next candle made a 1 minute high. So same, I manage structure pretty much on every time frame the exact same way. All right. So what I see is we have a 1 minute high here, but now the 5 minute has solidified a high as well. So I can identify this as 5 minute high, 1 minute high, whatever high I want to, as long as we understand that. So what I'm looking at is, okay, we enter the 5 minute zone, got a bearish candle. So if price, I'm going to go ahead and set my guideline. If price wicks down here, I'm exiting this trade and flipping positions to a sell trade. It's like I said, every zone on my chart is meaningful in some way. Price can react to it. At the end of the day, no zone on the chart is important until price shows a reaction to it. Price got to this zone and reacted to it. It could have just pushed through. You got to remember, the zones and stuff that we draw make sense to us, but to the market, it doesn't know what zones are there, what blocks are there. It's all different people making the best decision that they see. So let's see what the next candle is. Next candle is also bearish, but it didn't break the low. So we're not exiting, but we're leaving the same guideline. If it was a bullish candle, then we would need a new confirmation candle. Because it is a bearish candle, we can keep it the exact same and say, hey, if price triggers here, I'm exiting with some small, tiny bit of profit. We could call it break even, and I'm entering into a sell position because of it reacting there. So let's see. Boom. What do we get? Still within that range. So we got knocked out of this one, right? So we go ahead and take ourselves out of that. And I'll go ahead and explain something that I've seen earlier. Instead of acting like, oh, I don't know what's going to happen. I already know what's going to happen. And one thing that I kind of seen earlier that I was saying, okay, I really might have to start making decisions on is exit strategy. For the most part, I've always followed whichever exit strategy presents itself first. That's the one I am going to act on. And then also the fact that this is not only an exit strategy, this is also an opportunity to enter in a different direction if price is going to continue pushing there. Now, I did have some reservations against it. Now, the reason why is because it's testing in the 1 minute zone. So part of me was thinking, okay, why not just wait to see if it actually breaks the 1 minute? Now, the issue with that is if it did break the 1 minute, then I wouldn't have had any real opportunity to enter in the trade in that direction. The only opportunity I have to enter in a trade in that direction is catching it off the open zone with the confirmation candle. So it had me split because price did end up pushing basically to TP. The issue is, you feel me, that is not this is the exception versus all the testing I've done proving that it's more efficient for me as a trader to stay in. Now, one thing that I noticed here that I could have taken into account is this zone is so closely attached to the 10 minute. You know, but that's, I don't know. It's one of those weird things. I can't make a rule because one day, right? That's my thing behind it. I backtested and studied this rule, and that is the reason that I follow it so strictly. You know, it's just sometimes trades like this where it would have worked out differently. So what I did end up doing is I exited my trade here, right? Got rid of all of that. So got out with a small win, and I took my last trade in this position. Here to here, it was like 8. And so 9, 18.5, which also made sense because, hey, price just ranged, found its new high. If we go to the 10 minute, we see it also defined this high here. So we could identify this as a 10 minute high. Because the high has been solidified, guess what? Price gave its impulse. Now it's time for a retrace. So it also is not like something that, oh, it doesn't make sense why I have it there. Why I would look for a sell there. It actually does make sense. Price just finished this impulse. We could bring this up some because now that it found its high, price just finished its impulse. Now we're looking for a retrace. Because we're looking for a retrace, that would mean that on one of our lower time frames, we're getting some push to the downside. So now we are in this trade. We go to the 1 minute. again, it's like with the 1 minute, we manage it however we need to. So here I do see this isn't true 1 minute structure because there's still a 1 minute low here that needs to be broken. So I'll leave that there. So once this 1 minute low is broken, because one minute is still technically uptrending. 1 minute isn't downtrending until this low is broken. So I'm using this as a guide to say, hey, if price can break this on the 1 minute, now I'm more confident in the move, because originally I'm really like, I'm taking it because this is a part of my trading plan. So I'm confident in the move. But with the 1 minute in an uptrend instead of a downtrend and I'm in a sell, like it definitely does make me go, okay, well, I would feel even more confident if 1 minute at least switched, change of character. But I'm already in the trade again. Like I said, that's one of the things with open zones is typically with open zones, you're looking to catch a move off of it that is against the trend that is currently happening, right? Because price left here downtrending, but then it created new structure downtrending. So now as price reapproaches this open zone, price is uptrending. But we understand the respective open zones that still need to be filled, that they can sometimes price is only looking to fill that open zone and push right back off. And it gave us confirmations, 3 rejections, 3 bearish candles, and then it pushed past the low of the very first one. It's really good reason to enter this trade. It's not something I can be super mad at. So price pushed, gave something to the upside, but it didn't break the low, so we don't need to go to the 1 minute. We understand 1 minute, like I said, we manage it the same way. For the most part, I go to the 1 minute, identify my zone, and I identify the low or high of it, and I don't go and I watch it from the 5 minute. I don't go back to the 1 minute until price starts testing inside of the zone or until price breaks the low. So right now it's testing the zone, it pushed through the zone. Let's go to the 1 minute, because on the 1 minute what would have happened is we exit once it closes past it. So it broke, it got here, didn't close past it, but it wicked this out. So we ended up taking a loss and a small victory. That was our 2 trades for the day. And hey, that is what it is. After going back through it, it's one of those things that like, it happened, but it happened for the right reasons, you know? And kind of what I was saying earlier about it turned into the first move, the original move turned into a win. I'll kind of show you. Boom, where we get in. We got in like right here. It was like 11.5, 12.5, so 25.5. So what I say, price never broke this 1 minute low. What did it do after? Pushed up off of it. Broke that structure, came down some more, pushed up, smack TP, we would have been out. Yeah, smack TP, boom, we would have been out, and we would have took our cash and dipped. Simple as that. Yeah, we would have took our cash and dipped up here after TP was hit. So that was one thing I was referring to. But so seeing it, I understand, okay, a win was potentially available. But at the same time, following my rules, my trading plan, the way I approach the market and the way I look at the market, like, it's okay that win was missed. Because it was missed for good reason. Price pushed. Gave us a change of character. We were able to take advantage of getting in a buy down here. Right? So price gave us a, where did that occur? Low. So here, push. So the change of character occurred here. So this is where the high was broken. Pulled back. Gave us opportunity to enter here. We got in. It pushed up. But unfortunately for us, it pushed into another zone. Because it pushed into another zone, we are looking at one of 2 things. We are either seeing, hey, price breaks through this zone, or B, price rejects off of this zone, which then gives us the opportunity to cut a loss early, and 2, flip position, because if price is testing off a zone, rejects it, and continues to push past that rejection, that is confirmation to enter. You feel me? Just because we're in one position, we don't ignore confirmation to enter other trades in there. So that's part of my 2 exit strategy. My first exit strategy is just following it on the 1 minute, waiting for it. My second exit strategy is if price encounters a zone on its way to TP and gives us confirmation off of that zone, we're exiting our position early, our current position early, and flipping in that direction because price is showing that at this moment it's trying to push in that other direction. We do that. That's what we do. And sometimes, more times than not, it protects me, it helps me, and it works in my favor. But there are also the times that it doesn't. Like right now, where it got me stopped out. We took a loss on the flip of position, and then it would have gave us a win on the original trade. That happens sometimes, but that's why you have your rules in place. It's not so much about the outcome this one or two times, because at the end of the day, the market could do anything, but it's about consistency in my approach, consistency in my view of the market, consistency in what we're doing in the market and looking for in the market to make sure that the very, very, very best opportunities and trades are being taken at all times. Doesn't always work. You're going to lose. It's part of the game, but I can accept loss. Me following my rules, I can't so much accept losses that come from me breaking my rules or doing, or essentially I can't compensate or accept losses that come from me chasing wins, breaking my rules, doing things against it, ignoring certain rules just for the sake of chasing a win. Because while it may have resulted in a win today, tomorrow, next week, long term, it's going to hurt me in the long run. However, my rules, while if I follow those, today it might have fucked me over. Today I might not have got a winning trade because I was following my rules. But next week, next month, in the long run, my rules are going to be what protects me. Protects me from losing too much money, and it makes sure I make a good amount of money. Does it make sure I make a good amount of money every day? No. Does it make sure I don't lose a whole lot of money every day? Yes. And that's the benefit. That's the whole point. It's not about. There's always going to be an opportunity to win and take profit, but once you master losing, then you have nothing to really worry about in trading. You have no fear. The best part about trading is how fast and exponentially you can grow capital. The downside to trading is the same thing, but the opposite way. How fast you can lose capital, no matter the size. So I follow my rules because I would rather master losing. So understanding how to lose in the market, how that I may not be able to reduce the amount of times I'm going to take losses, but I can reduce the amount I'm losing when I'm taking losses if I find a way to manage my trades a little bit differently than just being focused on the win. Because if I can manage the losses all the time, and if my trading is more focused on mastering losses, when the wins come, cool, great, that's good. But when the losses come, I'm prepared. I understand how to deal with them versus being the person who is chasing that win, searching for that win. And when the losses come, you don't really know how to handle it or manage your account the right way to compensate for it or manage your trades. And so now you start to go through all those errors of a trader who's not profitable, who, yeah, you made some money, but you gave all of it back, maybe plus more, because you were trying to get it back in the long run from that too. So going back over it, I'm not mad at anything we did today. We got our one move, got a tiny bit of profit, took our second move, ended up taking a full loss. Hey, on the day we had about 110, 120 at risk, and we only lost about half of that. And that's an example of being able to cut the losses and not be upset. You feel me? Of course, going through it after I was finished with my two trades, I'm over here like, holy shit, man, I'm pissed. That could have been a win, whatever the case may be. I'm frustrated, just like anybody. But that's why after we finish our session, after I take my two trades for the day, if two trades are available, some days only one is available. Some days the market is just so messy and ugly that I can't even get one good one. But we were able to get 2, which is our max per day. And after our session's done, because our session typically ends at 11, today we were done by like 9, like around 9 o'clock. And then I just kind of played around with some other accounts and stuff, but no, that's neither here nor there. But yeah, we go back and review it to make sure. The main goal is that ease that you have when you're backtesting, you should have that when you're live trading. So I like to go through my live session and then backtest my live session. That way I see if I would have made the same decision if I would have seen it. Going through it as a backtesting session, I did. I seen it the exact same way I did in live time. I seen this chalk pattern. I seen an opportunity to get in here. I was able to get in here, ride it up to here. We got rejection off of this open zone. It pushed past it, so we exited flip position, and it just didn't work our way. We got caught. It caught us in a fake out. You can't avoid fake outs. Now, the reason I do confirmation and then a push past the confirmation is because that helped me reduce the amount of times I was caught in a fake out. But that doesn't make it to where I don't get faked out at all. Today was an example of where I got caught in a fake out, even though I had everything in place to protect myself from it. It's going to happen sometimes, regardless, no matter what you try to do. So that was my session for the day. Again, going back here, cleaning it up. One thing that I have kind of played around with the idea of, or am starting to do, is leave my high time frame on. So I take all my low time frame stuff off, just because like that is going to be different within the next hour or so. I leave my higher time frame zones and stuff on for the simple fact that it helps me. So like when I came to the market today, I had this already on, and it let me know immediately, okay, well, price hadn't broke past this low, and it hadn't broke past the high either, so price is still trading within this range. So let me go down here and see what it's doing within the range. So this kind of helps me understand and follow structure, because sometimes it'll look clean like this is from yesterday. It looked clean like this yesterday, but if I would have erased all this and came to the market today, I might have been confused, like, hold on, what the fuck is going on? I know how to read market structure, but I'm just saying in general. Plus, the high time frame takes longer to change. Like, this was from yesterday morning. Price still hasn't broke out of this structure high or low since yesterday morning. That's why I leave the higher time frame stuff on. Because if I leave on the 5 and 10 minute stuff, like the 5 and 10 minute stuff changes every hour or a couple hours at that. It's very rare that you're going to leave the market for 24 hours and come back and price is still stuck within your 5 or 10 minute high and low. But it's very likely that you leave the market and come back and it's stuck between your 1 hour or 3 hour or 4 hour high or low, just based on what price was doing during that time. So I'm gonna leave this on just because when I come in tomorrow, it'll help me understand and see, well, hey, did price break that to the downside at all? Did price break to the upside? It looks like it broke to the downside, but once you actually go to the time frame, you see it just wicked below. It never closed below. So that doesn't count as a break unless it actually closes with body below. So now we just leave this like this, and yeah, we are